Hello and welcome to our video on the scarce limited resources decisions that management may need to make in certain circumstances. In this video we're going to talk about the best way to maximize the short run profits when faced with these limited resources. So as an overview, we have to revisit the concept of contribution margin. We've talked about this in other videos with our CVP analysis. But the contribution margin is very important in many of these decisions regarding profitability. So remember, we take the sales revenues minus the variable costs, and this gives us contribution margin. That concept of contribution margin is telling us that these costs contribute to covering fixed expenses first, and then any leftover contribution margin is considered profit. So in many cases when we talk about CVP analysis, we talk about one product, but in reality most companies have more than one product. So we're really assuming here we have a multiple product firm. The goal is to maximize the production of the most profitable unit. Now notice I have that in quotes because we're going to define most profitable unit a couple of different ways. But the key thing is we only want to maximize up to the demand. It doesn't make any sense to produce more units, significantly more units, than we have a demand for. So once you maximize the production, once you hit the demand of that product, and perhaps maybe a little bit extra if you want to keep a little bit of inventory on hand, but once you hit that demand, generally you're going to switch to the next product, the next profitable product, and then work up to its demand as well. So again, for our purposes here in managerial accounting, we're going to assume that we stop right at demand and we don't produce any more. So really the question becomes, which product do we start with first? So we're going to talk about that most profitable unit. So again, we can look at that from a few different perspectives here. Here we have product A that has sales of 150, variable costs of 80, and then product B has sales of 125 and variable costs of 40. So if we look at that from the sales perspective, product A appears to be not really most profitable, but it has the highest sales. But to be honest with you, the sales itself really doesn't mean much. We have to look at least the contribution margin because that's the only thing that's going to cover fixed expenses and profit. Remember, we also, in this case, have shared fixed expenses of $5,000. So whatever profit each of these companies generates, or I should say, whatever contribution margin each of these products generates, has to cover $5,000 in fixed expenses before any of it becomes profit. So product B, in this case, again, I said product A has the highest sales. Product B, however, is going to have the highest contribution margin, which is sales minus variable costs. So in this case, product B, for our purposes, is the most profitable. So product B has an $85 contribution margin. Now let's take a look at the demand for product A and B. Demand for A is 1,000 units, B is 750 units. So just looking at this, the most profitable path would be to produce all of product B that we can, 750 units up to demand, and then switch gears and start producing product A, 1,000 units. And we'd be done at that point. We'd be up to our maximum profit. Now the reality of things is that many times we're going to have some sort of limited resource. We may not be able to produce all of both product A and B up to the demand. We just don't have enough of something to do it. It could be something like hours of specialized labor. We don't have enough people that know how to put it together to hit that demand. Supply of scarce materials, or processing through a specialized machine. Again, a lot of times you'll have some sort of bottleneck. So when we look at this situation, the contribution margin per unit of product is no longer the determining factor on which one to actually produce. Instead, it's the contribution margin per unit of scarce resource that's now more important. So it could be hours of labor, machine time, number of parts, because we only have so many parts around. So now let's take a look at an example. The limited resource here is a specialized piece of machinery. We can only have it running so many machine hours. Product A requires 1 hour of machine time. Product B requires 2 hours of machine time. So if we tried to produce everything, it would take 2,500 hours of machine time. 1,000 units of demand for product A times 1 hour. 750 units of product B times 2 hours, you get 2,500 total hours. But as you'll see in many cases with this textbook example, we only have 2,000 hours of machine time. So we cannot hit full demand for each product. So the question is, which one do we sell? Which one do we focus on first? Remember, product B had the highest contribution margin per unit of product. But again, under a scarce resource scenario, that's not our focus. Our focus is contribution margin per unit of scarce resource. In this example, that becomes contribution margin per hour of machine time. So the questions we're going to be asked are, which product should we focus on first, and then how many of both product A and B should we or can we produce? So the first question, which product should we focus on first, we said that the contribution margin per machine hour is now more important. Product B has the highest contribution margin per unit, but product A is going to have the highest contribution margin per machine hour. So we take the same contribution margin that we calculated per unit, but then now we have to divide it by the number of hours for each unit, the number of hours of machine time. Product A gets the 70 divided by 1 hour, so we have $70 per machine hour. Product B, their contribution margin of $85 per unit, gets divided by 2 hours, and that ends up being $42.50 per machine hour. So now product A is the most profitable per machine hour. We're going to focus on A up to its demand, and then we switch gears, and whatever hours we have left, we use for B. It won't maximize demand, but overall profitability will be as high as it can be given the scarce resource. So we said we're going to focus on product A. The demand is 1,000 units. It only takes 1 hour per unit, so that uses up 1,000 of our machine hours. Remember, we had 2,000 as our limit, so we have 1,000 machine hours left to use for product B. Product B demand is 750 per units, but remember, it takes 2 hours per unit. If we only have 1,000 machine hours left, divided by 2 hours per unit, we can only produce 500 units of product B. So that walks us through how to handle these scarce or limited resource examples. Again, 2 questions. The first question is find out which unit, which product is the most profitable per unit of scarce resource. Focus on that up to demand. Figure out how many hours of scarce resource you have left. And with that, how many of the second product can you possibly produce? So hopefully this has helped to clarify this particular type of scenario. I thank you for your time. Thank you for watching my accounting video on YouTube.com. I hope you've enjoyed that information. Accounting can be a difficult topic to conquer, and sometimes you just need additional information or assistance outside of the classroom. If you feel like you need some additional information, some additional resources, come visit my udemy.com course. I I have a variety of financial and managerial cost accounting courses available that may be able to assist you if you're having trouble with a particular course. In these courses at udemy.com, I have additional lectures on a variety of accounting topics. We also have downloadable Excel templates for all the various practice exercises we work, as well as a video walkthrough of the solution. I continue to update these practice exercises, so even after you join, you may see some new exercises. It's all geared toward helping you to understand the topics. So in addition to those additional lectures and the practice exercises, we also have quizzes and tests to help gauge your understanding of the topic. That may give you a better idea if there's something you need to go back and learn a little bit more about, read more about, watch a video on. We also have downloadable study notes that really try to drive that home. There's a downloadable textbook with it. So feel free to come join this class, come take a look at it. You can find this at udemy.com if you search for Severson, or you can just Google Severson Udemy Accounting to see a list of all the courses that are currently available. Again, I'm working on new courses as we go. Right now you'll see some financial and managerial accounting courses out there. I'm working on the intermediate and advanced side of those particular courses as well, so you may see new ones out there as well. Now, email me for a special 50% off coupon code. You can send an email to chrisseverson@hotmail.com, and I will respond with that code. It's a different code for every course, depending on which one you want. I can also respond with the actual link to that course. Now, all courses at udemy.com have lifetime access, and there's also a money-back guarantee if you're not satisfied. So come check out my course at udemy.com and see if it may be a fit for you. Thank you for your time.